Friday, November the 1st, and wow, the Bulls are back. The Bulls are in strong form, and this was all due to the couple of things, I think. The jobs report was pretty good, even though yesterday's GDP number wasn't good. Just a bullish sentiment that the consumer is still in the game. Now, the ISM number was down for the second month in a row. That didn't seem to bother anybody. I heard the comment that maybe the United States just isn't a manufacturing country anymore, so the ISM may be less relevant, and we should be looking at technology and measuring America's manufacturing capacity by also including its technology capacity. So, that could be part of it as well. President did say that there was going to be a forthcoming signing, and Kudlow said that still the China thing looks still pretty good. And you can see that some of the China stocks responded. So the advancers to decliners 3-1. The stock market breadth, yesterday we said it was going to come back down to normal. Woke up this morning and found out that yesterday's number had brought it down to normal, and the summation index was down a little bit. So that was not today's summation index, but that was yesterday. So today we should see the summation index higher than 3017, and you can check on that maybe in a few hours. It'll be updated by McClellan, certainly by tomorrow morning. But now that we've come down from not overbought down to the median line, we can see that this has happened other times. We were up here, we came down, and we touched this line. We did move up, but then we came down. So the bounce wasn't held, and we came down. Here's another instance. We just went through the line. Here's another instance where we went through the line. Here's another instance, very, very similar to this one, where we came down here, and looks like just below the line, took a little bit of a bounce, and then it failed. And it kept running into the median line and failing constantly. Here's an example where it went below the line, so it's not quite the same as this one. Now, if the next day, Monday, we're below the, well, we won't be. We're going to be higher up because this will reflect today's number. So you can see what I mean. We're still in an area where it isn't convincing that money has been moving into the market. But let's take a look. Let's go back and look at the volume. Now, FinViz, the volume shows in the Dow higher than what we normally see, but right on relative average volume, as was the NASDAQ and as was the S&P 500. So let's look at the individual stocks and see what they tell us in terms of volume. First, look at the S&P 500. We said yesterday in the video that we needed to open up above this candle, because yesterday we finished right here at the top of this candle. We finished right at the bottom, remember that? We needed to open up above this candle. Well, we certainly did. So if we had started lower, we would have had this area as resistance to further price down the line here. But that didn't happen. We did start way above, and we just kept on running. So now if we look at the S&P on a daily basis, we've got a gap created here. We'll draw in that gap over the weekend, and you'll see it on Monday. I continue to be amazed because, as you know, I went into cash 50% because I wanted to protect gains. I saw last year, right about this time, tremendous gains that I had get totally blown away. And right up until Christmas, all those gains just disappeared. So that wasn't going to happen to me again. I made money this week, but I certainly didn't make as much money as if I didn't go to cash a month ago. Not all cash, but 50%. But one thing they say in trading, never regret a trade that you made. It's not supposed to rhyme, but it does. Caterpillar, look at that. Now this is a Chinese stock. It's going to depend on China buying goods from the United States. If it's not agricultural goods like crops, maybe it'll be some machinery, and that's boding well for Caterpillar. So the volume was right on the 20-day moving average volume, and you've seen most of the days since the last week of October have been above average volume days. That's institutional buying, and we closed that gap. Gold, GDX. Two things to say. Number one, yes, we did have a day where we finished a little bit down, but look how far down we were in the day. And we came back and we regained a lot of that. So look at the 5-minute chart, and you can see that we dropped, did this little seesaw, but then we finished the day on a pretty strong note. And that's important. Why? Because the volume was so high. Yesterday, we had a very high volume day on the buying side. Today, we had a high volume day on the downside, but we finished with the buyers flooding in. So let's look at our volume on an hourly basis. And on the last hour, just a little bit of volume, and quite a bit of volume here. And it's red, but it's still quite a bit of volume. And the sellers were not able to take control here. So we just drifted into finishing flat with where we were at 3 p.m. So the last hour was restrained by the 50-day simple moving average. But I would say that is a good day for GDX, and I'm glad to be holding on to it. We still can see the candle get through the thin cloud in the next couple of days, Monday and Tuesday. We said we wanted to look at this area in here, though. We were looking at the Chiku span. And the Chiku span yesterday got over this 50 EMA, hit the candle, and came down here below this candle. That's a little disappointing, but not so much, because on Monday, we've got this gap that price can go through. The Chiku span can go through. The Chiku span reflects current price, right? So if it comes down on the day, it could, if it comes down on the open, it could hit the top of this candle. And that might be the support that it needs to drive it up through the 8 EMA, through the gap, and fulfill the prediction that it breaks out. AT&T in the gap. It's an old gap. Goes back to October of 2017, so it's a 2-year-old gap that it's trying to fill. And it finished again at the top end of its range. And volume was an average day, the average of 20 days. And we've seen that for the last, well, quite a bit. Right back here, although again, October the 23rd, we've seen that the volume quite high in AT&T. Now, because its price is moving up, its dividend is moving down, but it's still over 5% as a dividend stock. And people who are nervous will shift money into stocks that are strong, like AT&T, but also pay a good, consistent dividend. And 5.25% is nothing to sneeze at. I'm still holding 1,000 shares. WDC, this was its big earnings drop, and it did recover, and it got rejected by the 200 EMA. Whirlpool, still suffering. When's it going to be a good opportunity to buy back into Whirlpool? We've been sort of consistently predicting Whirlpool movement pretty reliably. Might say that I missed this top here, but now we've pulled back to 38.2%. We're below 250 moving averages. Let's hold on a little bit longer. One thing I don't like to be is somebody who buys in at the top of the market. Now, I'm not at the top of Whirlpool, I'm not at the top of WDC, but I sure am buying in when the market is at its top. And greed is the biggest thing to worry about. the greed of the people who have made profits this year. Remember, the market is up 22, 23, 24%. People are going to be taking profits before the end of the year. So just be aware of that. Amazon, this is Amazon on the weekly. And you can see a few weeks ago where we came down to test the flat cloud. Flat clouds attract, right? So this flat cloud here pulled the price down. The moving averages held it from moving up. And then these are daily moving averages on a weekly chart. The cloud supported here. And we've had a good week now. Let's go look at the daily. And we're into the cloud. So we're into a place now where I thought we might spend a little bit more time tracing the outside of the cloud. But we're into the cloud, but look here. The Chiku span got stopped by the 200 simple moving average. So that's quite important. And once it breaks that, it's got a lot of room to run before it runs into these 50s, and by then, we could be out here where they coincide, and it might just sneak on through. So I almost sold some puts on Amazon today, but again, I don't like doing anything when the market is at its top, except sell. And I've already done that. That's why I'm at 50% cash. Google, nice little bounce back. Don't want to talk too much about Google because I really haven't been following it. So Apple, awesome. I did not sell more puts today because as the stock price goes up, the value of the puts goes down. I would love to see just a little bit of a pullback, and that would make the opportunity of buying puts so much more attractive. It's up today because it released TV Plus, and everybody is excited to see what the viewership numbers are next week. Let's see if anything leaks out about how many people binged on Apple TV Plus this weekend. Thank you very much for listening. Appreciate your confidence in me.